Good afternoon, everybody, and welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group. Securities offered by Money Block, here to wrap up all of the action from today. And there's quite a bit of action. As a matter of fact, if we take a look at the markets, the Dow Jones basically finished the day flat, up about 2 points to 20,858.20. The real action here just couldn't get that momentum to the upside. But we're watching a critical level of 20,708, 20,700. That is going to be a critical level that the bulls in the short term are going to need to hold. And right now it's looking a little bit mixed. I think the market is getting a little bit frustrated with the fact that there is not clarity about tax reform, which I think is the biggest driver right now of this rally. And they're not getting a good idea about what, in fact, and if, in fact, we're going to have this $1 trillion infrastructure plan put into place. Now, healthcare is going to be out there, and healthcare is going to be debated ad nauseum. But I think the tax reform is what the market is waiting for. And if we don't get the tax reform that was promised, and we don't get it at the speed that the Treasury Secretary Mnuchin actually brought up, which is August, you're going to see a market as we start to sense that this is maybe something that may not only be retroactive, but may not come until 2018. I don't think the market's going to like that. Taking a look at the S&P 500 today, flat, up about $1.90 at 2364.90. Now, this is something that's important. Today we saw it actually challenge and test that 2353 level here on the SPX. That's the 20-day moving average. This is the challenge we've been waiting for. It bounced off and did finish the day in the green ever so slightly. I think we're going to be watching the non-farm payroll, but I am going to be watching very closely that wage growth number. If it comes in at a disappointing level, in other words, it is not above, let's say, 0.3% as far as wages increasing, you could see a market that is going to turn, because growth needs to be not only in the balance sheets of companies, it needs to be in the pockets of consumers. Consumers are driving this market, and if in fact we're not making more money out there, folks, I don't see how the catalysts are going to be playing out, even if we start getting more clarity on when these other reforms and policies are going to be in place. Taking a look at the Nasdaq Tech, performing well today, up about 4 points. The Nasdaq was up at 5364, off of its worst levels, basically just kissing up near its best levels of 5370. But you're seeing here that tech is just grinding right now. The next level of support is going to be coming in at 5308. That's the one I'm going to be watching very closely. What's not buying into this market rally and the support levels is the small caps. I've been harping on this for the last basically couple of weeks. The small caps have been lagging for the last week, and they have broken their 20 and 50-day moving average. And actually, we have the first close below the 50-day average. And I'm going to actually change this to a weekly chart and drill this down. We haven't seen a close below the 50-day moving average basically since April of 2016. So it's been a year that we really haven't seen a close. You could basically look here, let's say May, and then it basically bounced back. And then the last time we saw this challenged was on October of 2016, and then the enormous bounce up, and it's just been grinding all year. Again, this on the weekly perspective, it's still above the 20 and 50-day moving average. So you're seeing that the longer term perspective, it's holding up. And a pullback's healthy. But now we're looking at this area between 1360 and 1260. This is going to be the area that the bulls are going to have to start ramping up. And if we don't see data, in other words, if in fact non-farm payrolls do disappoint tomorrow, which we're not anticipating after the ADP number, or we don't see wages moving in the right direction, that's going to put some question on the current run to the upside. that's where you're going to basically try to keep your powder dry, maybe start putting in some positions to establish maybe some longs, but do it in terms of selling maybe out of the money cash secured puts, especially if volatility starts to run up. Speaking of currencies and volatility, the dollar pulled back down 16 cents, but well off of its worst levels, coming off that 102 level, finishing the day at 101.96. That did not give relief, though, to the commodity markets. Crude continues to be under pressure. And it makes sense. There is a glut of inventory, and the bottom line is that even though the economic data has been positive, you're seeing production that is still off the charts, both here in the United States, where technically you could say that we are energy independent, and you're starting to see it also in Europe as far as Russia's production and in the Middle East. So again, I think that until we start to see economic data and growth and the inflation due to growth, you're going to see crude under pressure. I'm looking at support at somewhere between the $48 and $44 level, but I think this is the area that it's going to basically waffle around for a while. As a matter of fact, if you look at it from a longer term perspective, this will give you some context. It's right now finishing below its 20, 50, and 200-day moving average. You're looking at the next support level right around here, at right around $44, $45. If in fact crude does continue to pull back, that's where the pressure point's going to be. And then finally, taking a look at the bonds. And the reason why I'm bringing up the bonds, this is the 10-year, is that we had a pretty big sell-off today. Yields did pop. We saw the 10-year and the 30-year both down. This is interesting action. And it's also very interesting because we saw that the ECB held firm on their interest rate policy as well as their monetary infusions. It looks like they're going to taper as of April 1st from 80 billion euro to 60 billion euro. But they were saying that inflation and growth are happening at a greater pace than what they anticipated and are forecasting in 2017 and 2018. But I got to tell you, folks, I'm confused because if in fact they are seeing that, why are they leaving the patient on life support? It makes no sense to me. But we're going to keep an eye on that because the taper will occur on April 1st. Also, Brexit, Article 60 or Article 50 is anticipated to be triggered at the end of the month. Well, let's see if the UK actually has some volatility. That could add some more volatility here as well in the United States. And speaking of Europe and Asia, we will be talking about that at 8:30 Eastern Time and 8:45 Eastern Time, both Asia and Europe here on MarketStream.live. So join me then. All right, folks, have a great night, and we'll see you soon.